So a whole bunch of us got unemployment compensation in 2020 because of the coronavirus pandemic. That means your state unemployment agencies sent you checks maybe every single week for a few months. You might have even gotten an additional $600 every single week during a few months of 2020. And the question is that unemployment compensation taxable? I'm going to answer your questions in this video today. Hi, my name is Steve Hunt. I'm a certified public accountant, and I am the consultant for prosperity and adventure. I'm also the owner of collegetaxrefunds.com, where we help recent college students and their parents and families collect thousands of dollars back on old tax returns that they don't even realize they missed when they filed their old taxes. So if you have a recent college student in your family, have them check out collegetaxrefunds.com to see if there's any more money they could get on old taxes. Today, as I told you, I want to talk about unemployment compensation, and this is specifically for the year 2020, the year of the coronavirus pandemic. And as you see here in the image below, $10,200 of that unemployment compensation is tax-free when you file your 2020 taxes. That's the first $10,200 for you and for your spouse if you are filing jointly and both of you received unemployment compensation. So let's describe what's going on here. Normally, unemployment compensation paid to you by your state when you're out of work or whatever is taxable. It's reported on the 1040. Specifically, it is reported on right here on Schedule 1 of the 1040. You can see it on line 7. It says unemployment compensation. This is where you're going to typically report your unemployment compensation that you get, and it is then going to be added into your income, combined here, and then included in your adjusted gross income for the year. And then, of course, your adjusted gross income becomes your taxable income after deductions, and then you're going to pay tax on it. So normally, you do pay tax on your unemployment compensation. However, because of the American Rescue Plan Act of 2021, which was signed into law by President Biden just a few days ago on March 11th, 2021, the first $10,200 of your unemployment compensation will not be included on that line on Schedule 1. And the first $10,200 of your spouse's unemployment compensation, if you're married filing jointly, will also not be included on that line. So when you're doing your taxes, or when your CPA or whoever's doing your taxes receives your 1099-G, that's the 1099 form you get from your state telling you how much money you got in unemployment compensation, you will enter the full amount into your tax software, into TurboTax or whatever. They will put that full amount on the unemployment compensation exclusion worksheet, but then they will remove the first $10,200 for you and the first $10,200 for your spouse before putting the final amount of taxable unemployment compensation right here on line 7. If you're filling it out by hand, you can Google or look up the unemployment compensation exclusion worksheet, and you can do that worksheet yourself. But it's very important to do that worksheet because the unemployment compensation is taxable and has other rules involved with determining whether it's taxable or not. But I just want to point out that for most of us, you get to subtract the first $10,200 of unemployment compensation for yourself and for your spouse if you're filing jointly before putting the final line on that Schedule 1. Now, this is very important for those of you who are also trying to claim the Earned Income Credit. The Earned Income Credit is a very valuable tax credit. It's a refundable credit, which means you can get money back from the government even if you didn't pay any taxes during the year. So that refundable amount can go all the way up to above $6,000 if you have a few kids and you've earned some money. But many of you who are familiar with this credit will know that if your adjusted gross income is too high, you will not qualify to claim the Earned Income Credit. This is because this credit is only for low-income households. Now, if you received unemployment compensation in 2020 and you were forced to report that unemployment compensation as part of your AGI, or your adjusted gross income, that might make your AGI too high to claim the Earned Income Credit. And you could say, well, at least I got some free money from the government this year. I got unemployment compensation. However, now because of the American Rescue Plan Act of 2021, and because you get to exclude the first $10,200 for yourself and your spouse from your AGI, this is going to make it, this could reduce your AGI. If you and your spouse both got $10,200 or more, this would reduce your overall AGI by $20,400, putting you down perhaps low enough to claim that earned income credit. So this is a very beneficial thing where, again, you don't have to pay tax on that first $10,200 per person of unemployment compensation, and you will now have a lower AGI, which may make it so that you can qualify for the earned income credit. If you have any questions about this, go ahead and put them in the comments below. I invite you to please like this video, share it with your friends and family, and please subscribe to get more videos about taxes and financial income tips. Thanks so much. Have a great day.